Microstrategy has been one of the hottest stocks in the market in 2024. Shares are up 440% as I'm recording on November 25th. Now keep that date in mind because all the numbers I'm going to go through here may change over just the next few days, much less the next few years. But I want to explain exactly how Microstrategy and Michael Saylor, its CEO, is using arbitrage and what it's calling the Bitcoin yield to drive value, or at least perceived value, in the stock right now. Now, this is something that may not work forever, but it's worth at least understanding what he's trying to do and how he's trying to justify the yield that he's generating on the stock. So I'm going to go through all the numbers today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube, and don't forget to check out my newsletter, Asymmetric Investing. There's a link to that on the screen. There's also a link in the show notes. That's where I cover stocks with 10x potential. You can also get access to the asymmetric portfolio, which is more than doubling the performance of the market so far this year. That's not just with one stock, that's with over 20 stocks in the portfolio. So check that out if you want more of my research. But I'm going to start with the arbitrage angle, and I'll be back with that in just a second. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a bond account from public.com. Now, this is a pretty big deal because when interest rates drop, so can the interest you earn on your investments. But a bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. You can see what that looks like on the screen. So while other people are watching their returns shrink, you can sit back with regular interest payments, but you might want to act fast because the yield is not locked in until you invest. The good news is it only takes a couple of minutes to get started at public.com. Lock in that 6% or higher yield with a bond account only at public.com/ASYM. What Saylor is really doing is using the arbitrage between MicroStrategy's share price and the value of Bitcoin to his advantage. This is just a chart for 2024. And what you can see is since the beginning of the year, MicroStrategy's stock is up 436% now. Bitcoin is up 109.6%. So what that means is if you're looking at MicroStrategy as just a company that is holding Bitcoin, there's no operations, just forget the operations of the core business. That's basically meaningless at this point. So it's just a company that's holding Bitcoin. If the value of the company itself is worth more than the Bitcoin that it holds, then it makes sense to sell stock and buy more Bitcoin. You're playing arbitrage between your market cap value and the value of Bitcoin. Let me show this explicitly based on today's numbers. This is a look at MicroStrategy's market cap, and I've included the whole calculation. I'm going to do this throughout here. But this is the number of shares outstanding as of a filing with the SEC. They came out on Monday, and I'm taking that times the share price of the stock. You get a market cap of $97.9 billion. Now compare that to the Bitcoin that they currently have on the balance sheet. Again, this is current as of Monday. 386,700 Bitcoin at $92,371.25. That is $35.7 billion worth of value of Bitcoin. Now, if your goal is just to hold Bitcoin, then it makes sense that you would sell more stock, even more debt, just to buy Bitcoin. It's going to increase the value of the Bitcoin that's already on the balance sheet, and it's going to reduce the risk of the stock falling. This is arbitrage. It's simple arbitrage, but it's been a reinforcing loop for Saylor and MicroStrategy in 2024. Now, the interesting thing lately is Saylor talking about Bitcoin yield. Now, Bitcoin doesn't actually generate a yield like you would in something like a savings account. You have $100 in a savings account. A bank says, hey, we'll give you 5% for just keeping that money in your savings account. At the end of the year, you have $105. That's how yield typically works. Bitcoin doesn't generate a yield. But what Saylor is saying is that arbitrage between the Bitcoin price and the total value of Bitcoin held on MicroStrategy's balance sheet and MicroStrategy's market cap, as they issue more shares and more debt, creates a yield for investors that means that each share owns a little bit more Bitcoin than they did a year ago. That's what this yield is. I'm going to go through these exact numbers. This is the second quarter earnings presentation, and I just use this as an example because they have a chart that goes way back, and you can see MicroStrategy didn't have any Bitcoin on the balance sheet until 2020. But that's when this strategy really began. And I'm going to go back and calculate this number right here. This was when the Bitcoin yield was relatively low. I'll show the more recent numbers in just a second. But what we want to do is we want to calculate the ratio of Bitcoin divided by the assumed diluted shares outstanding. I'll get to why that's a little bit of a misleading number in just a second. But that's going to help us calculate the Bitcoin yield as MicroStrategy is trying to sell it. So you divide this number by this number and then see how much it changes from period to period. So let's go through this exact calculation. What I'm going to first do is calculate the end of period Bitcoin divided by diluted shares outstanding. And I'm using the numbers that was on that table. 132,500 Bitcoin divided by 15.6 million shares outstanding. That means that each share outstanding holds 0.0084871 Bitcoin on the balance sheet. Then I'm going to go back and I'm going to calculate the beginning of period Bitcoin per diluted share outstanding. You do the same calculation. You get a slightly lower number, 0.0083350 Bitcoin per share. What MicroStrategy is saying yield is the percent change between the beginning of the period and the end of the period. So you take the end of the period number minus the beginning of the period number, divide that by the beginning of period number, because that's how you calculate the change, and you get 1.8%. You could do this for any one of these periods on the table. So let's go back to the more recent numbers, the updated numbers as of Monday. This is the disclosure for the filing for Monday, November 24th. So you can see the total holdings that they've got of Bitcoin. Just crazy that the number of Bitcoin that MicroStrategy holds has more than doubled in 2024. That's because of that arbitrage between the market cap of the stock and the value of Bitcoin itself. But the yield, so that calculation that I just did, the amount of Bitcoin per share year to date is actually up 59.3%. So every single shareholder of MicroStrategy owns 59.3% more Bitcoin today in their shares than they did a year ago. Now, the other thing to layer on top of that, and these numbers are changing rapidly as I'm recording because the stock is plummeting. So that's why some of these numbers are changing throughout this video. But the other thing MicroStrategy is doing is selling debt to buy Bitcoin. That's in this part of the table right here. The interesting thing that they do when they calculate yield is they don't calculate that in the number of shares, is they don't say that that's part of the enterprise value or the shares outstanding. They use the conversion. How many shares would this convert into if you're over the conversion price? So that's at least worth understanding, is exactly how that conversion works and what could happen on the downside. Because this looks easy. Just keep doing this arbitrage forever and the stock will keep going up because you're going to own more and more Bitcoin. As long as Bitcoin goes up, you're going to keep making money and you're the biggest buyer of Bitcoin. So obviously Bitcoin is going to keep going up. But how does this go wrong? This goes wrong when these convertible shares don't convert into stock. They have to convert into something else. So this is the latest SEC filing for the $3 billion offering the company completed on November 21st. What's important here is the convertible details. So each $1,000 principal amount, that's how bonds are denoted, is basically in $1,000 increments, will convert to 1.4872 shares or $672.40 per share of Class A stock. If we go back to this filing, that's this line item right here. That's where this 4.46 million shares of dilution comes from, but they're saying it's going to dilute at this price. Obviously, we are not at that price right now. So what would happen if you get to 2029 and the stock is at $357.84? Well, there's a few scenarios here. This is where you have to go into the details. Prior to December 4th, 2026, so 2 years from now, the company may redeem for all cash or any portion of the notes if the last reported sale price of the company's Class A stock has been at least 130% of the conversion price then in effect for at least 20 trading days. So this is basically saying if the stock goes up, MicroStrategy would be able to sell shares, convert that into cash, and then all they would have to do is pay 100% of the principal amount due. These are 0% coupon notes. So basically, bond investors would just get their money back. That's it. And what MicroStrategy would be doing is selling shares at a higher price than they are currently at, expanding that arbitrage. But that goes till December 4th, 2026. On June 1st, 2028, holders have the right to require the company to repurchase for cash all or any portion of their notes equal to 100% of the principal amount of the notes to be repurchased, plus any accrued interest, which there isn't any in these. So 2028, investors could come back and say, you know what? The stock is nowhere near this conversion price. We just want our money back. We want our principal back. If you get all the way to 2029, the company may pay or deliver cash or shares of Class A common stock or any combination thereof at the company's election. So after the latest debt offering, MicroStrategy has over $7 billion worth of debt that will eventually have to be paid with cash or with stock, depending on the covenants and the details of the convertible notes. So this is where the company's valuation and the value of Bitcoin come in. Right now, there's a huge gap between the market cap of MicroStrategy stock and Bitcoin. So they can play that arbitrage, but eventually that difference comes down to zero. Oftentimes, when you have an exchange traded fund like this, like an exchange traded note, there will be an asset value, but the stock will actually trade for lower than that asset value. As long as there's a difference between the market cap and the value of Bitcoin that's held on the balance sheet, you can play that arbitrage game. Obviously, Michael Saylor wants to hold as much Bitcoin as possible, so he's going to keep playing that arbitrage game. But what happens if it goes negative? And what happens if it stays negative? Suddenly you have debt that you have to pay for. There are two ways you can pay for that. You can pay for that with cash. MicroStrategy does not have a lot of cash on the balance sheet because it's using its cash to buy Bitcoin. The other thing you could do is you could issue stock. That would dilute shareholders. That would give you a negative Bitcoin yield based on the calculations I talked about earlier. So that's not ideal. Or you could sell Bitcoin and then convert Bitcoin into cash, especially if that arbitrage goes negative. That would actually be the right thing to do. The problem with this with Bitcoin is if you start selling Bitcoin, this is the biggest holder of Bitcoin. If Michael Saylor and MicroStrategy start selling Bitcoin, that's going to have a negative price pressure on Bitcoin. Just like their buying has been positive price pressure on Bitcoin in 2024, their selling would have the opposite impact. It would send Bitcoin lower, which would send MicroStrategy's stock price lower, and it's a downward spiral from there. This is how things go wrong. This is the reason that these arbitrage games, they don't typically last forever. And that's ultimately the risk that investors are facing. You're seeing MicroStrategy stock drop quite a bit, even as I'm recording this video. And that's because this arbitrage is only going to be available as long as the market cap is higher than the value of Bitcoin in the balance sheet. And if Bitcoin falls, which this is a very volatile asset class, now that there is debt on the balance sheet, there has to be cash flow that's coming in to MicroStrategy to pay for the debt that would need to be refinanced starting potentially in 2027. There are some convertible notes due in 2025, but the convertible price on that is $39.80 per share. So probably not likely that we get that low from a per share standpoint. But you look out 3, 4, 5 years, depending on what happens with Bitcoin and MicroStrategy's stock price, this could unravel once that debt starts coming due. So keep all of this in mind as the company issues more shares, as there's more debt issued. I think the risks get bigger and bigger for MicroStrategy, and even just the premium that the stock is trading for on top of the Bitcoin that it holds on the balance sheet is a little bit troubling as an investor. But that is what's ultimately generating this yield, as MicroStrategy is calling it. So hopefully that was helpful in explaining what's going on with MicroStrategy. If you have any questions, leave those in the comments section below. Don't forget to subscribe to Asymmetric Investing. Again, you can follow my Asymmetric Investing portfolio. Thanks for watching, everybody. See you here next time.